So there are any number of reasons how the Chinese economy can ultimately collapse. Demographics are at the heart of most of it, but it could be trade war, it could be a deflationary spiral, it could be any sort of resource restriction. It's not a short list. The news in the last few days is that the Chinese are doing another stimulus program. It's starting to feel a lot like what happened in Japan in the 1990s, where they'd throw more money into the situation, hoping to generate economic growth, but it never did because their problem at its core is demographic. Unless you can get people to spend more, to consume more, all that's left is industrial development. In the case of Japan, they used that for real estate, and so the bottom fell out of the market, and it took 25 years to recover. And you could argue it's only in the last 5 years that Japan's gotten back to some version of normal. In the case of China, the demographic decline is way more advanced than it ever was in Japan 20 years ago. In fact, you could argue that in terms of the collapse of numbers of people under age 50, it's actually much worse today in China than it is in Japan even now. Even though Japan's the world's oldest society, it's that lopsided. Anyway, back to the topic. The Chinese indicate that they're going to issue a lot of debt, which is something they've never really done before, with the numbers being floated somewhere in the low hundreds of billions to the mid hundreds of billions. So by any measure, even for an economy China's size, this is potentially a huge amount of capital. The question, though, is what are you going to put it towards? Three things have been floated. Number one, buying up property that hasn't been finished so it can be finished. Well, that will exacerbate the oversupply of condos, which is already more than enough to house over 1.5 billion people, so that does nothing, except for maybe generate a little bit more public goodwill, because that's where 70% of private savings is. So that'd be a political decision, not an economic one. The second one is to bail out the debt of local governments. Local governments can sell land and issue bonds, but they can't raise taxes. So they have no way of really generating an income, and once they issue debt, they have really no way of paying it back. So that's like a $4 trillion asset class that's completely bunked. And while, we throw $500 million at it, that's not nothing, but it really doesn't move the needle in any appreciable way. And the third idea that the Chinese have floated is, shocker, building more industrial capacity. So we're in this weird situation where the Chinese are kind of damned if they do and damned if they don't. I mean, if they do nothing and consumption continues to wither and tariffs against them for their overproduction continue, then their industrial case fails and the population basically falls into impoverishment. This new idea, throwing a lot more money against industrial output, actually generates potentially a worse outcome called deflation. Now, deflation sounds nice, but it is not. We're all familiar with inflation. When prices rise, either because there's an insufficient supply or too much demand, eventually you get spiraling prices that hurts everybody and eventually eats away at the value of economic assets. Based on who you are, that's different levels of disastrous. But deflation in many ways is significantly worse. Deflation comes from a similar imbalance between supply and demand, but it's when there's too much supply compared to demand. And in those circumstances, prices start dropping because there's too much stuff, people can't possibly consume it all. And eventually people become used to the prices going down, so they put off their purchases, which increases the disparity between supply and demand even more. And eventually it gets so bad and the oversupply becomes so much relative demand that the industrial base starts to collapse and people start to lose their jobs because nothing is profitable anymore. And then all of a sudden you're hitting it on the demand side as well. The demand is collapsing because people have lost their jobs. Some version of this in a persistent but mild form happened in Japan starting in the late 1990s and continued all through the 2000s and through most of the 2010s. We also had a version of this in the Great Depression. The problem we have in dealing with deflation is ultimately you have to get supply and demand back into whack and so that they're actually aligned with one another again. The two ways to do that are to increase demand or decrease supply. In China, it's difficult to imagine being able to increase demand because there are now more people over age 50 in China than there are under age 50 in China. And generally, it's people under age 40 that are doing most of the consumption. And that is the class that has been completely gutted by the one-child policy, in addition to the world's fastest industrialization process. It's only been a generation since Chinese folks were having on average 5 and 6 kids to now having 1. And in fact, in the metros where the majority of Chinese now live, we're now looking at the birth rate being 1/4 or less of replacement levels. We're talking about 0.5 children per woman. There's not enough people to even think about a meaningful consumption rebound. Well, that leaves destroying supply. And in this, the Chinese face 2 problems. Number one, oversupply has been the state mantra for the last 40 years, and that is the Chinese development model. You look around the world, you figure out something that's in demand, you produce it, you use subsidies, you use cheap labor, you produce, not for your domestic market, for the foreign market. You export it. And over the last 40 years, this has moved from product to product to product to product, from steel to cement, and now increasingly electronics products, and now they're trying to get into electric vehicles, and it's just on and on and on and on. Well, in a world that's experiencing breakneck economic and demographic growth, there's some strength to that model. And especially in the 1990s and the 2000s, we had the developing world kind of getting in the act of industrialization and urbanization. But a couple things to keep in mind. Number one, you only urbanize once. And once you do that, your demand for those sorts of product drops. Second, when you urbanize, your birth rate collapses. And if you're, say, Brazil, that means you had a demographic moment in the 90s and the 2000s, but now you're actually aging faster than the European countries, and your demand has kind of hit a plateau. And you're also looking at the Chinese, who are basically doing product dumping at scale. You're like, you know what? I don't want to play this game. And so it's not just the United States and the European Union and Japan and Canada that have put all these tariffs on things like electric vehicles from China. It's also Indonesia, it's also Brazil, it's also Turkey, and most recently Russia. Basically, the Chinese have produced all this stuff with the intent of swamping markets to save their social model, and in doing so, they basically encouraged everyone to block the markets of Chinese products. And so if the Chinese were to add more industrial capacity now as part of a stimulus program, all that's going to do is exacerbate the oversupply, and now there's nowhere for it to go. So I would argue that a year ago, before this really got serious, the Chinese probably had about twice the industrial plant that they needed, because so much of it was geared to service the foreign market. Well, now a lot of that is being shut out of foreign markets, and the Chinese are having to deal with it at home. Any stimulus will be on top of that. So the only way that the Chinese can avoid deflation at this point is to basically gut half or more of their industrial plant, and then you've destroyed the employment program for the entire country. And if there's one thing the Chinese government is obsessed about, it's making sure that people have jobs so they don't get together in large groups and go on long walks together. So there are any number of reasons how the Chinese economy can ultimately collapse. Demographics are at the heart of most of it, but it could be trade war, it could be a deflationary spiral, it could be any sort of resource restriction. It's not a short list. But we're now in a situation where they could theoretically make it all about internal miscalculations and trying to rationalize their economic model for a world that can no longer support it. So this has become very real very fast, and the Chinese are struggling mightily. The question is whether or not they can come up with enough policy creativity to try something new. And since Chairman Xi has basically gutted the entire system of all decision makers but himself, I don't think the chances of that are very high. For those of you guys who have been watching the Chinese markets and their economic recovery / not recovery over the last year, you'll notice that it's kind of been a shit year for them. By their own statistics, they're not going to hit their 5% of GDP growth for the year. And if you talk to private folks who have a more realistic understanding of what's going on in China than is what's left of the Chinese bureaucratic system, they basically gutted their own statistics and they're nearly useless. We are talking about a borderline recession going on in China, and this isn't new. The Chinese economy stumbled in the fourth quarter of 2019 with the onset of COVID, and aside from a couple of blips here and there, it has kind of been down in the dumps ever since. It would not surprise me if we had an actual forensic audit done on Chinese books if the Chinese economy writ large over that entire period was actually roughly the same size as it was at the beginning of the period. The Chinese lie so pathologically about their data, not even out of any sort of malfeasance. It's just the system is designed to brag. And so you get fat data at the local level, much less at the national level. Anyway, in the last couple of weeks, we've seen a huge number of stimulus measures, a huge number of measures, not huge stimulus, two different things. They've tweaked down the mortgage rate a little bit. They've reduced something called the reserve requirement, which is the percentage of bank deposits that have to be held back at the bank in order to bank loans. I mean, all of these things are mildly stimulatory, but they really don't get to the core issue that China now has so few people under 50 that there just isn't much of a consumption base that can be goosed with anything. And that's before you consider that the government of Chairman Xi Jinping really doesn't see private consumption as a meaningful driver of economic growth from an ideological point of view. The idea that people would spend on themselves as opposed to spend on the state is something that seems to be a little bit alien to him based on his rhetoric and his speeches. Anywho, it also kind of ignores the point. We've talked a lot about consumption. We've talked about investment. We've talked about trade. But something we don't talk about very often are Chinese banks, which are the method by which capital makes it into the Chinese economy, like most economies. And that is also completely broken. The Chinese method of encouraging economic activity is to lean on the banks so that they lend to everyone for everything at basically, once you adjust for inflation, 0 to negative rates. And if you put a bottomless supply of capital in front of anyone, they will of course gorge on it and you will get economic growth. But whether or not it is stable or sustainable is of course questionable. Basically, for those of you in the United States, I've just described subprime or Enron or the savings and loan crisis. And it's all fun until such time as someone actually has to start valuing the loans that are on the books. And when you put a huge amount of credit out there, a lot of these just don't work out. So in the United States, the term we use is non-performing loans when one of those loans doesn't work out. And should 1.5% by value of a bank's loans go into that NPL category, then the government regulator is going to be knocking on your door and forcing you to change your policies in order to get that number down. Because once you get over 2%, generally that's when banks start snapping like matchsticks because there just isn't enough margin on these loans to generate enough income to then grow out of a number of bad loans. Well, in China, the margin is 0, sometimes maybe even a little negative. And because, let's just say, fiduciary responsibility is not exactly something that translates into Mandarin very well. So you get all these loans that probably should have never been made, and a lot more go bad. And by most internal estimates, China's total NPL ratio for the entire banking sector is somewhere between 5.5% and 6%, which would basically mean that their entire banking sector on average is shit out of luck. Doesn't mean that they're all there, but for every bank that is below that number, you of course have a bank or two that are above that number. And as a rule, the banks that are least stable are the ones that are not on the coast. As a rule, the inflow of investment, the outflow of exports, and the involvement of foreign money means that the coast tends to run a little bit tighter ship. But as you move into the interior, especially the poorer areas, the more agricultural areas, then it's all about the Chinese state banks, whether they're the big four national banks or one of the smaller regional ones. So if you want to talk about the future of Chinese economic growth, it's not going to be goosed by changing the reserve requirement. It's going to be improved by getting the banks into a position where they can actually function a little bit more normally. But you can't do that until you dispose of the NPLs. In the United States, every time we've done that, it's only been because we've had a recession that is linked to the financial sector in some way. So the subprime crisis of 2007 to 2009, and the savings and loan crisis in the 1980s. They need to go through something like that, but you're talking about something that is at least an order of magnitude worse, and in relative terms, because the U.S. economy is so much stronger than the Chinese economy, you're talking about something that's even worse than that. So it's nice that the Chinese stock market is having a little bit of a pop, but none of the underlying issues have been touched at all. And trying to make credit easier at a time when credit has already been overextended is simply going to make the inevitable crash that much